Hello, ladies and gentlemen. Welcome back to another video. Today we have a huge topic. Something seems very off with GameStop in a great way. But before we dive into that, I wanted to say, as always, this is not financial advice, never will be financial advice. Please do not misconstrue it as such, as investing in any equity security or anything in general is extreme high risk. With that out of the way, ladies and gentlemen, let's dive into today's topic. So, first things first, GMEU has been removed from the Reg SHO list. To tease a couple other topics we have coming, the possible connection between Berkshire Hathaway and GameStop, where Ryan Cohen has challenged Warren Buffett to a thumb war, some swap kind of DD, and a possible Roaring Kitty sighting that we'll save for the end of the video. But first things first, so GMEU's off Reg SHO. And I don't need to spend time explaining how this thing is a disaster. GMEU and is pretty much the point of its creation was extremely questionable, which we will look at too. But for the purposes of price action, what happens when GMEU comes off Reg SHO? And I've put it here with these arrows on the chart. You can see at various times it'll come off. A couple days later, there's a big green candle. It happens pretty much every single time. Yeah, pretty much every single time. Now, yesterday, so on Tuesday, November 25th, when GMEU was being cleaned up, and I messaged the fund manager publicly on X that it looked like they were going to clean up his fund yesterday. I messaged that to him in the morning. That's not me knowing everything or anything to that degree. It's just predicting the AP, which is the authorized participant, the best time for them to clean these things up. They want to do it before earnings. They might be out of swap season now, and they might want to take it off for a couple weeks, find the locates for these shares, and then after earnings, in any type of offering situation or anything that would cause people to want to short the company again, to go back on Reg SHO. But for now, it's off Reg SHO, whoopee. And we got a decent green candle yesterday, all things considered. But you can see here a couple days after it goes off Reg SHO, boom, green candle. A couple days after, boom, big green candle. Here, big green candle. And here, big green candle. So clearly, this is either a mega big coincidence or there's something very much fishy and related to it. If you had to ask my opinion on the matter, I would certainly go with the latter of that explanation. But there you go. That's a little Reg SHO history. And the fact that it's even been on this many times and it was created back here is really sad. And you can tell that someone was having trouble with XRT, and that is sort of the origin story of GMEU's creation. Now, the Berkshire A connection, and I wanted to highlight this because something seems very off with GME. And looking at their financials, 5 consecutive profitable quarters, the business is improving, things are growing in the collectible space, revenue streams are clearly being prioritized by Ryan Cohen, and the company today is in a much healthier financial state than it were 5 years ago. The only difference really is that GameStop has significantly less debt, but their revenue is down. Now, the cost of them doing business is much lower than it is today, which I would argue is much healthier. And the business is clearly turning around. Revenue starting to look a little more promising, at least in terms of profitability and the cost to produce that revenue. So I kind of question what is going on here and why is the stock beaten into Earth's core over and over and over again. And I saw a comment on one of the videos yesterday, and thanks guys, by the way, for commenting, for liking the videos, for subscribing to the channel. I saw a comment on the video yesterday where someone's like, oh, the bond offering killed GME. And that is factually incorrect. And let me just give that person a quick little lesson here, which is not to sound arrogant at all, but just be factual, try and be objective here. Bond offering here, right here. Okay, first bond offering. GameStop rips up 70%. Okay, I mean, the conversation ends there. Now, why doesn't it happen here? Well, because this is different. This is not indicative of a second bond offering now killing the company. This is probably 1, 2, 3, 4, 5, 6, or 7 total equity return swaps in this period. Renewals, rolls, whatever you want to say. By doing this, they get synthetic exposure to the stock. Correct me if you've heard that before. And this is not price action. This is meaningless garbage with a great earnings report in here. And this is the time that I would have expected to see people pile in and be like, wow, let's take a shot on this company. It's really turning things around. Not the case. I also want to say that shares outstanding, I don't think has a whole lot to do with anything for this stock either. And that we can touch on another day. But for the sake of this video, I think I found something very interesting here. So Berkshire going down 99%. This was Berkshire A, their Class A common stock going down 99% all the way to $180 a share. For reference, it trades over $700,000 a share. Typically, it went all the way flash crash to $180 per share on a very suspect date. Let me just pull up the chart for you guys so you can follow along very clearly, and I'll tie this into what I think is happening today. So Berkshire trades at 763,000. That's great. Nothing fishy there. Look at the date. So look at the volume down here in the bottom of the screen. Look at this insane volume that Berkshire had in 2024. Insane. Even through 2023, it was increasing all the way up for a long time, right? But peaks out in 2024. Well, let's look at the date here. Some very odd behavior on Berkshire A. June 7th. Disappears. It goes from they're trading 15,000 shares, more than 15,000 a day, which for a stock that trades in the $600,000 to $700,000 range, very obscure. Drops off a cliff. June 7th. What happened on June 7th? Well, GameStop has a date prospectus supplement on June 7, 2024 to issue up to 75 million shares of common stock. They issue 75 million shares of common stock, and Berkshire's volume goes off a cliff. And guess what? Doesn't return since. Look at it now. They trade 100 shares a day. 100 shares a day. They went from 15,000 shares to 100 shares a day. That's nuts. So what happened? Well, for the people saying that Ryan Cohen bailed out the shorts, you might have some sort of argument that is accurate in this sense, with Berkshire's A volume dropping off a cliff. Now, just a real quick recap here. This has been going on since 2019. Okay, they even traded less than 100 shares over the counter every single day. Okay, but you can see that this has been going on for some time, and there's a lot of weird anomalies. Now, I don't want to get into the nitty gritty because the most important thing is, and Superstonk is a really good point of this, but they noted that the bond offering, the first one, so let's go back to this. Let's go back to the bond offering, which was here. So late March, early April. Let's go to Berkshire just for the sake of kind of playing into that argument. And you can see the volume. Okay, it's steady in 2024 up until 2025, and early April falls off another cliff. Gone. When that bond pricing is done, it's gone. It's gone. It hasn't returned since. Nothing. There's nothing left on Berkshire A. And Berkshire Hathaway is also hoarding cash to insane levels, to detrimental levels, really. You can see it on this chart here. That makes no sense to be hoarding this amount of cash. Is there some kind of swap, counterparty, obligation with cash, collateral going on with Berkshire A? It would seem crystal clear to me that it's plausible. Very plausible to make that link. Very plausible that Ryan Cohen knew of that back in 2022, maybe even earlier, that there is a connection here via some kind of derivative product, via some kind of swap, total equity return swap, connected to Berkshire Hathaway, which would be mega, mega big. Now, the other irony to me is that I think what Ryan Cohen's doing is trying to become a Berkshire light, where Berkshire started as a textile company and is now, a fund, a very great performing fund. So I wanted to highlight that is not giving into the argument that Ryan Cohen has bailed out the shorts, but that there is something mechanism-wise that when Ryan Cohen does dilute, things get very wonky. That when Ryan Cohen does the bonds, and he could in the future, by the way, do more of those or preferreds, and we could really go down that rabbit hole. I don't think increasing the share count, though, does anything negatively to impact the stock. I think it's very short term. I think it kind of, if they're taking on water in this moment and he does it here, I think the algorithm is pushing this thing down anyway. I think they're rolling swaps a couple weeks later anyway, and I think Ryan Cohen has an idea of that. So is there a connection? Yes. Did he bail out hedge funds? Not directly, but there's clearly something happened in June of 2024 that is not a coincidence. Now, moving along in the video, I think this is an excellent old post on Reddit called The Puzzle Pieces of Quarterly Movements, Equity Total Return Swaps, Deep Out of the Money Puts, In the Money Calls, Short Interest and Futures Roll Periods. So this was written a long time ago. I highly suggest everyone read through this. If you're looking for information on swaps and essentially how synthetic they are with no direct exposure to the company, read through this. You're going to be even more, I think, frustrated is the best word than you did before knowing this information. And I'm not saying that to say I'm bearish on GameStop. This made me more bullish than I ever have been, and I was feeling extremely bullish lately for some super big anomalies that I wanted to get to. Now, so that's a great starting point. And people do ask me, where can I find information? I would start with old DD on Superstonk always. And it's funny that the old DD kind of, holds such truth even years and years and years later. May 1 and April 30th of 2025 on GME. This is from Richard Newton's original sheet. I made a copy of it. This is mine. XRT shares outstanding dropped to its lowest point since 2007, before the financial crisis. 1,400% short interest on XRT, and $1.6 billion were 1.6 billion total equities errors on this day. Something very bad happened, I think, to shorts on May 1 or April 30th of 2025. Let's go to our GME chart to visualize that here with the, you had the bond offering here again, and then something broke. Something broke. I'm convinced of this in this period of time right here. I'll circle it for you guys so it's easier to follow along. Something very bad, I think, happened to shorts or someone in this period of time right here. And it led to them filling XRT, in my opinion, a couple days later, leading to a 30% pop. But right here, someone, I think, did a gigantic can kick or agreed to settle some of the anomalies that have been going on in the stock. Now, again, are we bordering tinfoil here? Sure. But the data says that XRT shares outstanding have never been lower. We're talking about even during the 2020 run up and the 2021 coup de grace grand finale squeeze where Melvin went under and all this. It was lower than it were during that period. So something big is clearly still going on with this stock. So I find that extremely, extremely interesting. Let me know in the comments if you feel the same way. Now, why do I say something's wrong? Well, because nothing's happened since then. There's been absolutely nothing happening since then. Now, we have Q3 earnings coming up. That information of the release date of those earnings should be coming out in the next few days, today or Friday, I think, at the latest day. So GameStop earnings will probably be on December 10th. And maybe 11 or 12. I think those would be the days to look for the earnings. And I think we're going to see another good report. But there's clearly something, forget TA, forget anything else that you like to look for on this stock. And I'll even pull up the TA and say, hey, we might get a cross up to the upside on the PMO with the 55-day moving average smoothed out and dipping down. This could be an explosive run. But I think it's all about the fails. I think it's all about the swaps. I think the swaps are the number one piece of this puzzle. I think the collateral being used, whether it was in Berkshire A, whatever they're doing now with GMEU and XRT, the ETFs are obviously a problem. I think it's connected to the swaps. I think they're getting shares and exposure and clearing out locates and fails to deliver via these products as well. It's a very interesting and elaborate system, but it doesn't feel sustainable. And it feels like this now more than ever, they are struggling. And again, I don't know if that's what Roaring Kitty was alluding to with his Seymour Moas from Futurama post about the dog waiting for its owner to come back. But that's a good segue into that he is here. At least I think so anyway. And again, you can't say these things with certainty, but 5,000 call blocks back on GME. This was in an interesting little roll too. I believe they had calls on expiring December 5th. They had the 2150s, the 23s, and the 2150s. They rolled those up to the $20.50 strike on November 28th. So these would be weeklies. I don't know if that's for an exercise. I don't know if that's for, to anticipate a little bit more of a Thanksgiving relief rally and take some money from there. But also very interesting, these same size call blocks. Where did they pop up? They popped up on Chewy. We all know Roaring Kitty has been in Chewy. It's confirmed with the filing from the SEC. He dumped his stake, but 5,000 call blocks from pretty big time orders here for $1 million and 1.17 million. This is another rolling up or rolling dates on these. This came from the stock exchange floor. So someone placed this huge order and it had to get filled. So to me, this says that, hey, Roaring Kitty is active. He's definitely not posting, but he is active. Maybe we'll get a message from him sometime soon. But if I were him, you have to put yourself in his shoes too. I would be extremely cautious of what I say and what I do because he moves the stock so much. And to me, I still, in my core, I think that's because he knows the rules, the times, the settlement better than anyone else. So it appears that he moves the stock, but there's no doubt that the Aladdin algorithm is also tied to what he's doing and what he's saying. So I think it kind of goes hand in hand. But above all else, he knows the rules better than anyone. And I do not think he's out on this play. I think he's here. I think he's trying to communicate something to us. And if you look to these 5K call blocks that were bought for GME, or at least rolled, it happened at 11:11. And, I don't consume a ton of the tinfoil. I don't at least make financial decisions on it. That is the most important thing, by the way. If you're going to take anything away from my content, I would personally, and I'm not saying you should do anything, but I would personally never take a financial decision based on tinfoil, ever, ever, ever. They were filled at 11:11. I mean, he's so calculated. He's so precise with his memes, with his filings. Every single thing he does is intricate. It's detail oriented. This has Roaring Kitty written all over it. And I'm not trying to hype anybody up. I'm not trying to suggest that this is going to be bigger than May of 2024. I don't think it is. I think this is going to be a nice relief rally where they're going to clear off some of those FTDs on or around earnings, or leading up and do kind of like a pre-earnings run up. But I would expect this to top out at 26, 27 max. Maybe we touch 29. I can't imagine they gamma ramp this thing. The options chain would have to look a lot different than it does right now. So that's kind of my ramble for today. I just want to go back to what I said at the beginning, where something seems very wrong because this business is better than it were when it's squeezed. There are more anomalies ever, like we saw with XRT's share count being the lowest it ever has been since 2007, back in April and May of this past year. Something is very off, and someone is finding these different ways, like with GMEU. And to my knowledge, there's actually a 3x leveraged ETF fund coming out in the next couple months. I think they're struggling more than ever before. And above all else, and this is probably the only extreme DD you're going to get off me, and I'm saying this sarcastically, time and pressure. I think that's what it's going to boil down to for this stock. I'm more bullish than ever. It's not financial advice. I'm just looking at data. I'm trying to connect dots behind the scenes. I think Ryan Cohen's pretty aware of what's going on. Roaring Kitty, obviously, I believe wholeheartedly knows what's going on. But to give out dates, to give out any sort of hype or what to look forward to, I think that's insanely risky. I think it's simply time and pressure.